price action that we've seen here over the last 2 weeks has been horrendous. The S&P 500 at this point in time is down a little over 11% in just a little over a week. There have not been very many times where we have seen stocks gap more than 2% to a 52-week low. There's a couple of very interesting data sets that we're going to take a look at in today's video. But before I get into those data sets, I want to talk about the VIX. Right? If we look at the financial news media right now, everything seems horrendous, right? It seems like fear is all over the place, recession conversations. It seems like it's really bad out there, and the price action is matching that. But the VIX isn't. The VIX is that put to call ratio on the S&P 500. And the VIX is still trading essentially where it has traded at for most of the year, in this mid-30 zone. Right? Usually the VIX and the S&P 500 move inversely to one another. And if we go back in time, I'm going to back this chart out on a monthly basis. We're going all the way back to 1987. Here is the 1987 VIX spike. That marked the market bottom. Here is the 2000 level VIX spike, marked the market bottom. Here's the 2009 VIX spike, marked the market bottom. And here is the 2020 VIX spike, which marked the market bottom. And in here was that taper tantrum, the 2019 sell-off into the end of the year spike. Right? VIX makes some pretty big moves on market bottoms. We don't have that right here, and that is a concern. It means there's not enough hedging going on to have that washout, that capitulation. When we look at the price action on the S&P 500 itself, it looks like capitulation, but people are not buying the level of protection on those puts that we have seen in the past that mark that market bottom, and that is concerning. The other thing that we have talked a lot about here is where this market might ultimately fall to. Right? We have talked about the importance of the different price action zones. The 50% retrace levels at that 3,500 on the S&P 500. That's the level that we're watching now that we've broken underneath 38. Right? Typically, you need to hold the middle of the zone, which would mean we took 2 steps forward and 1 step back. We retraced 50% of this move. That's where you typically tend to find out what the ultimate outcome is going to be. Somewhere in that 50% retrace zone. If the bulls can hold on to there, that means that the move off of 2020 has a much higher propensity to continue to follow through to the upside. If you lose that 50% range, it becomes a lot more difficult. The Russell has broken below its 50% range. So here's that low to high. 50% was that 1700 level. It's right here, and we're below that. Now, I have the last vestige of support really from this breakout zone and this price action zone that we had in 2020. It's right here at about 1650. Any more downside, we've given up completely that 50% retrace zone. Russell is a good risk gauge, and so that is very, very concerning as well. Now, what I want to take a look at is that historical data set. The S&P 500, after it gaps down 2% or more to a 52-week low, there's not a ton of occurrences of that happening here. And this chart, by the way, goes all the way back to 1982. So we're looking at 40 years worth of data, right? This happened during that 2000 to 2002 zone a lot. It happened during that 07, 08 time a lot. It happened near the bottom in 2020, and now it's happening right here, right? The question that we have and everybody is asking at this point in time is, are we like we are here in 2020 near that bottom, or is this just kind of the beginning of this occurrence like we saw in the 2000s and 2007? When you look at all of this data over the next week, the market's positive 62% of the time with some incredible sized rallies. You see 10, 8, 18%, 11% moves. And then there's some big moves on the downside as well. 10% down, 8% down, 7% down. You go out 3 months, you have some huge numbers to the downside during that 07, 08 zone of 30, 27%. Then you have some huge bounces in there as well, especially at the bottom in 2009, right? So when you were here, the bounces didn't look that good, but when you were here, look at these returns in 3 months, 40%, 50%, 30%. Those are some big, big numbers. Now, we can look at this and refine it even a little bit more. We have that 2% gap to 52-week low, and the second time it happened inside of a week, because it happened 2 times in the last week. We get less signals. And again, you can see a very similar set of data where we have a couple of big negatives 3 months out and a couple of huge positives. The question that everybody has is, are we here or are we here? The VIX is not telling me the story that we're here. The VIX is telling me the story that we're probably closer to here. There's no guarantee on that. We really want to see, when the market is washing out the way in which it has, we want to see the VIX and that fear level really spike in the market. The other piece to think through is, when we look at those past times, the Fed was stepping in and helping us out. During the global financial crisis of 07, 08, 09, the Fed was stepping in and helping us. The pandemic, the Fed was stepping in and helping us. Here in 2022, the Fed is actually causing more pain than help, because they have to tame that inflation zone. And we're looking at continued rate increases, which is taking capital out of the markets. So there is a lot going on here. The bottom line is, we are trading over the last week or so in a capitulatory manner, where typically we have tend to have some big rallies. The VIX isn't telling the same story, and the Fed doesn't have our back like normal. So the question for me on the S&P 500 is, what's going to happen inside this 3,500 price zone? Are we going to come down in here? Are we going to hold this zone and start to turn around and make that bounce? Or are we going to continue to see that washout like we saw in the early 2000s, in 2007 and 2008? We're going to pay very close attention, because what happens here is really, really important. The price action, again, has been absolutely horrendous here over the last week or two. It feels like we should be nearing that zone where we get that bounce, but not all the data points are telling us that. What the data points do tell us is, if we do get that legitimate bounce, and we do get back up over this 3,800 zone here, the bounces historically have been extremely strong. So we're going to, again, continue to pay very close attention to what happens here. Hope this video was useful information for you guys. As always, feel free to reach out. You can reach me at mtedesky@perspectivewealthplanning.com. If you want to talk anything about the overall markets, or give me a call at 814-580-9881. Have yourselves a great finish to the week. We'll see you all next week. Take care.